Is the U.S. economy about to stall before it can speed up? David Kelly, J.P. Morgan's chief global strategist, discusses why the economy faces significant headwinds before any benefits from the new tax bill kick in.
Your outlook for the economy a lot or not?
Only very slightly. It's fine. I mean, the economy is slowing down slowly. But I think the key thing here is we got 80,000 state and local government jobs added. That may have to do with the seasonal, because it was in June and we had a lot of teacher hiring, which doesn't sound quite right. So it may be a seasonal there, but we only saw 73,000 jobs added in the private sector. But overall, there's no collapse here. I mean, the economy is just gradually slowing down. The thing that I'm a little bit concerned about, though, is that we're seeing a rising impact of immigration crackdowns, and we're seeing a slowly rising impact of tariffs on the inflation numbers. So there's a lot of drag on the economy that's going to occur before the stimulus from this tax bill. And so, I feel like I'm a long-term weather forecaster, but basically I think the economy is going to slow down through the end of the year, then it's going to speed up, and then it's going to slow down again. But it's all within a very narrow range.
So when the bill passes, which is sort of clearly the base case expectation at this point, is that positive for stocks for the rest of the year?
The stock market is very easy to please these days, isn't it? Yes, it is, to the extent that we're going to have diminished uncertainty. So if you think about the first half of this year, it was all about policy uncertainty. I mean, how can anybody invest with all this uncertainty? Over the next few weeks, we're going to get certainty about fiscal policy, because they're not going to pass another bill. This is the bill. And we're also, I think, going to get more certainty around tariffs. I mean, even though it may not come out at exactly a 10% universal tariff, we'll know more. And even on immigration, as this thing passes, there's massive funding for the arrest and deportation of immigrants here. And we're also seeing some significant declines now in people immigrating the traditional way. So that's beginning to get clearer, too. So the picture is getting clearer. Markets hate uncertainty, so I suppose getting rid of uncertainty is a positive. But honestly, when the clouds clear, what you've got is a fairly slow-growing economy with a tendency for inflation to overheat because of tariffs.
White House thinks that this bill will add 3% growth. We'll start getting 3% growth from it.
I don't see how we'll do that. I mean, in order to do that, you've got to boost productivity. Because if you look at U.S. economic growth in the long run, so far this century, it's been about 2%. That's 1.5% from productivity, 0.5% from the growth in labor. The problem is the baby boom is retiring. The working age population, native-born working age population, is shrinking. So if you end up with sort of zero net immigration, you've got no employment growth, and that means you're 1.5, not 3. Now, we might do better than 1.5, but we're not even close to 3. There's nothing in the outlook which tells me that we can sustain 3% growth.
What about, hello, Mr. AI?
Yeah.
And the inefficiencies and conceivably the increase in productivity that will come about as this starts to really move into the enterprise?
We do think that that'll become more important as you go on further on out. And I think that this very tight labor market, this lack of immigrant labor, will actually, in some ways, turbocharge AI, because you're going to have to marry AI with robotics more and more to try and do the jobs that these people are doing. But it's not an overnight thing. And I do think that over time, over a number of years, it will gradually enhance productivity, but not short term.
Where's the balance in portfolios at the moment between the traditional focus on the US continues to outperform over the long term, and both bonds and international equities? I was joking with Dave and Sarah at the start of the week that the FTSE 100 year to date was ahead. It's just holding on to that over the course of this week. It's almost like it's eroded again, which I mentioned because how short-lived will this overseas equities outperformance be?
I think it has some legs. I think the dollar has come down significantly, and I think that this is a really key question, because this year there's been a lot of uncertainty, but the dollar's still come down. It's usually a safe haven in uncertainty, but I think people are thinking, maybe if you've got less job growth, maybe if you've got higher tariffs, more protectionism, maybe the U.S. economy grows more slowly. And for a lot of investors, both here and particularly around the world, should I be so overweight the U.S.? It's, the U.S. is exceptional. I mean, we have exceptional technology. We've got exceptional, business and spirit and innovation. But maybe it's not quite that exceptional. So I think money will continue to flow a little bit more around the world as people try and rebalance. I think that tends to push the dollar down. I think it will tend to cause international to outperform.
I mean, you started off by saying the market's going up because all this clarity, right? We're getting the uncertainty lifted. But Wilfred brought up the trade. I'm not sure we're getting clarity on trade. It's good that we got a framework for Vietnam, but we have a big deadline on Wednesday. What about that uncertainty?
In relative terms, but if you think about where we were in April, we had these massive proposed tariffs. And I think that with a lot of countries, what's going to happen is we're going to end up with something close to the universal tariff. They'll cut some sort of deal because there's a lot of pushback on the administration from small businesses and big businesses who say, we can't live with 30% or 40%. You know, we don't like tariffs, but if you do 10%, we can live with it. So I think the message to the administration is, look, whatever you're going to do it and be done. I think there's a very strong message from the American business sector to the administration on that, and I suspect they are listening.
David, great stuff as always. Good to see you. Thanks for joining us.
Anytime.